So hi and welcome to the Data Explorers Market Update with me, Will Duff-Gordon. So we're talking about retailers because we have this week some of the major retailers announcing their February sales figures. It's going to be pretty interesting. Now, don't forget, this doesn't take into account, this is kind of pre a lot of the worries about the oil price, which clearly is going to have an effect upon people's appetite to go and spend. But there is a bit of doom and gloom around the retail sector, and quite a few publications have picked up on our numbers that show that if you look at the top 20 UK companies that have hitting new highs in terms of short interest, a third of this group happen to be the kind of the retailers, the home retails of this world, and that's quite significant. So let's have a look at some other names. We picked out some other names. Let's maybe get the ball rolling, no pun intended, with Adidas, who do make footballs. They have steady short interest at only 2.5%, but the institutional investors whose activity we can kind of proxy through the lending data we capture, the inventory data, they've actually bought 10 million shares over the last 6 months in Adidas. Did they know that perhaps they had forewarning or picked up a sense that Adidas was going to do a deal with Diesel and Snoop Dogg to drive sales, ho-ho? And maybe we look at Trinity Mirror, the UK sort of publishing. They own the Daily Mirror, Sunday Mirror, and quite a few regional publishers. It's been quite a sort of company fighting with a rather old business model as things get more online. However, short interest has come down a lot. It was 3%, is now down at 1%. So people think that Trinity Mirror is turning a corner, and that's a positive for them. We cross the pond, have a look at Target. There's low short interest in Target. Things are a bit more negative in Gap, actually, where short interest is up at 3.5%, which is the highest it's been for some time. Not a massive, but certainly the direction is pretty significant there. We think that Gap, the Wall Street Journal reported that they had a rather tough end of last year. How has that spilt into this year? Well, the short sellers are getting ready for bad numbers there a little bit. Saks, the perennial, very upmarket store, has got 8% short interest, which is very, very big, but to put that in context, it was 35%. So people are certainly covering their shorts in Saks, maybe expecting them to be doing just fine. That's a little wrap of the retail world. If you'd like to read the report, it is at dataexplorers.com/news.